Hey, welcome back, everybody. So here we go. We've got Zillow, who is giving us some September numbers and prior, saying, hey, listen, the sellers are no longer in charge. It is not a seller's market. After 20 some odd months, it is no longer a seller's market. It is neutral. Well, no kidding. We're going to go over that and a few other things. Hang on. Okay, so here we go. If you're watching this show every single week, this is not new to you. We've been talking about this being a neutral market for a long time. And in fact, our show today, we're going to go through a few things. One, we're going to talk a little bit about why it's a neutral market. We're going to talk a little bit about what our top headlines are and what's going on with mortgage rates, and including with the video that we happen to have done, I think it was yesterday with Dan Golden. And then, of course, actually it was the day before. And then, of course, we've got our metrics that we look at and revisit every single week to let you know where we're at in the market so you can make a informed decision. There's no marketing, anything like that. So let's get the show on the road here. So when we take a look at this, according to Zillow, Seattle no longer considered a seller's market, according to their heat index. So the super cool part about that is we do get that kind of, I'm going to call it that third-party endorsement saying that, hey, we've been pretty much accurate over the last 3 months, which is more consistent with what we've been saying is, look, the number of homes coming on market versus the number of homes going off market are very close to each other. All right. So that means that we're in a more balanced market. We're not seeing it heavily weighted to sellers. We're not seeing it heavily weighted to the buyers. It is actually quite a bit more than what we thought we would see as far as total numbers. But with interest rates coming down, we saw some pretty good things. All right. So when we actually come in and we take a look at, and let's pop back to our chart here. When we take a look at, get over here, what sellers were looking at, it says, hey, listen, you know what? Sellers who've been waiting for the market shift, well, guess what? It's been here. The market shift has been here for a while. Rates went down to about 6%, 6.02 to be exact, and now they're up to about 6.68, 6.65, depending on who you look at. That's par pricing today. The Freddie's numbers, well, they're an average of the last 7 days, and they have a little bit of a lag when they play catch up or going down the other way. So when we take a look at all of the information that is coming in on the media side of things, right? It says here we're getting mixed signals in new home construction data. We're going to go over that. Mortgage rates move higher after stronger economic data. Again, we will go over that a little bit. And then, of course, 30-year fixed is up to 6.68, 6.65, depending on who you're looking at. And then, of course, a loan comparison. We'll put that link down below for you guys so that you can, there's no cost, it's free, there's no login. You just go and put your numbers in and it spits out some good, solid numbers, taking into taxes, insurance, blah, blah, blah. Anyway, with that being said, when we take a look at what is going on as far as rates, make sure that you watch, well, Dan and I did a very long, it was a 45-minute kind of webinar, if you want to call it. We are breaking it down, or it's broken down, I should say, into 12 parts. One of them got released today, and we will release the others, progressively, so that we just blow up the, hey, we don't want to blow up the internet, right? So anyway, we're going to piece those out over this week so that people can go ahead and watch them in small little sound bites, because we do go over a lot of information. And if you are a first-time home buyer, if you're looking at entering into the market, you need to watch it. There's some really great information there for you. Again, there's no selling, so you just never know, right? All right, so as we come across, let's take a little bit of Freddie here. So Freddie is showing 6.44. Again, it's kind of lagging. You can see where the Feds did their drop, and then all of a sudden rates have continued on an upward trend since then. All right, understand, the rhetorical we, meaning the lending industry, had already baked in price reductions in anticipation of the Fed's reducing the Fed rate, either by a quarter or a half a point, or what we call 50 basis points, which is half a point, 25 basis points, or a 0.25% of rate. All right. Now, because they went to 50 and we had some positive reporting numbers, which come out every Wednesday, rates have actually been going up. People have been pulling out of the bonds, which when bond values go down, interest rates go up. As bond values go up, interest rates come back down. Follow the 10-year treasury. They're not tied to each other. They just freakishly follow each other. All right. So I kind of like that. I like that. They follow each other. Anyway, so with that, those are some good things to watch. Now, in November, we're going to see the Feds actually meet again. Remember, the Feds do not control long-term mortgage rates. They meet once every 6 weeks. When they meet once every 6 weeks, they adjust or may possibly adjust rate, which is your home equity line of credit, also called a HELOC, your credit card payments. If you're getting a new car loan, commercial loans, right? What banks lend to each other on a day-to-day basis, all short-term stuff. That's what they control. Now, they can affect long-term mortgage rates, and as you have seen, as they have continued to go up. Now, towards Q4, we're in Q4, we will start to see, I think, some of that settle back down again. 2025 in late quarter one and into quarter two, I think we're going to actually see ourselves again into the fives. I think it's going to be about 5 3/4-ish. And I think it's going to be bopping between that and the low sixes. And I think we're going to get quite a bit of activity. My humble prediction for October, if I reference that in February, then we'll know. All right, moving on. When we take a look at, again, what is happening with our metrics, okay, here we go. So when we take a look at that, market times are still holding pretty steady, but they're a little bit higher than where they were at last year. New on market, average of the last 7 days is 994 homes came on market. Let's call it 1,000 homes. How many people went pended? Almost 1,400. Okay, so we're still seeing a number of buyer activity taking more homes off market that are coming on market. We had 936 closings, and nice enough, we had quite a few less homes that actually had a price reduction, meaning that they've already started to capture. There's still quite a few there, but we're seeing a little bit less. In fact, let's just blow up our numbers a little bit more here. All right, so you can see that on our price reduced, we're about 900 homes, and then of course we had a few that canceled and expired. Not uncommon. That is in fact a very common, especially this time of year. And in fact, this time of year is the best time of year to negotiate against a seller because 1, they want to get their home sold. 2, there's a lot less buyers out there. You have a lot less competition, unless of course we start seeing a significant reduction in mortgage rates, which, okay, first part of November, the Feds meet. If they drop it a quarter, that's going to be a positive sign. If they drop it a half, that's probably a negative sign this time. And we'll see what happens with mortgage rates at that time. All things considered, I would expect at best, I think a 0.25% rate. I don't think they're going to drop it twice this year. Some people think they may drop it in December, and I'm not sure that they will. We'll wait and see what happens, right? Who knows? Anyway, it's just a guesstimate by all parties involved. So when we come back here and we take a look at all of these metrics, which we go through each and every week, yes, if you want super accurate information, hey, listen, man, just ring-a-ding the bell and, hit the like. And, of course, naturally, we want you to subscribe, but we'll go down that path a little bit later. All right, so let's talk a little bit about price, right? So when we talk about price versus what's active on the market and price as in what has sold, okay? So when we take a look at these numbers, we can see year to date, the average list price, top chart there, is about $10,000 less than where we were at this time last week. Pretty normal. However, The sold prices actually ticked up a little bit by $2,000. When we take a look at it month over month, it's up $47,000. That's a significant jump. That's a bigger jump than I kind of expected. But remember, solds, that's looking in the rearview mirror. So technically, we're looking at things that happened late August and part of September that is now coming to close. And that's when those interest rates had dropped down into the low sixes. So people were able to pay a little bit more, had a lot more buyers coming out into the market. You can tell by the number of pended versus by the number of active versus the number of sold. And we can see that we have a super awesome, stable, balanced market right now. Rates are very favorable. Some sellers that are looking at life changes, not a bad term, life changes, just life changes can be any number of things. But we are seeing life changes and are willing to trade in their super low interest rate for something different. With that, we've got a pent up buyer demand. And so with more inventory, we're seeing that really nice, healthy, every single week, good number of actives coming on, solid number of homes going pended, and a solid number of homes going sold. And of course, we have our ever so danglers out there with price reductions, canceled, and expired. Totally normal stuff. All right. So if we head out and we take a look at what's going on, we talk about overall volume, right? Okay. Overall volume, pendeds are up, basically a little over 4%. And we're almost, 2.5%, 2.6 to be exact. More homes sold than what we had last year. And that's pretty awesome. Actually, let me blow this up, makes it a little bit easier for you. There we go. All right. So, when we take a look at pended is a great trend because that's dynamic, that's live. And when we take a look at that for the same month, year over year, holy smokes, we're almost 50% more pended. Why? Because we had those rates drop. We had more homes coming on market. And we had that. And as you have seen each and every week, for homes coming on, they're absorbed, they're taken right back off the market. And that is a super strong, balanced market. We're seeing just, the wave comes in and we take it in. And as it goes back out, again, it's not a big vacuum. It just comes back in again. And that is what we're seeing each and every week, as we should. Why? Because again, a balanced market is exactly that. Okay. The fair number of homes coming in and a fair number of homes going out, with those going, to a sold status. That is absolutely perfect. We don't see the extremes. We're not saying volume of homes coming in, which is like flooding the market and driving pricing down. No, it's coming in and it's balancing. Okay, enough of that. I think we killed that one to death. All right, let's take a look at new construction. Super, super, super interesting. So new construction actually saw a little bit of an increase in price as far as solds. There we go. They were up month over month, $67,000. And that is a big deal because they have been suffering and going back and back. Now, granted, they are offering some pretty amazing things. So between now and the end of October, great time to buy new construction. Again, they need to get product and inventory off of the books, as they say, for month end. And as we get closer to December, you're going to see more and more incentives from buyers, builders. But you may not see price reductions. You're just going to see additional incentives. And that's super important. You need to make sure you're working with an agent that clearly understands it. I know I say that every single week. It is super important. Okay. If your agent does not know how to ask that question, you are leaving tens of thousands of dollars on the table, unfortunately. I'm just saying. All right, moving on. All right. So when we come across and we take a look at the actual volume, so for the first time in, gosh, I can't tell you how many months, I want to say it's like 4, the number of sold is actually on the positive side. We're in the black versus in the red. Hang on a second. Let me blow that up for you. All right, there we go. So we're in the positive, not by much, 26 homes, but we're still there. The pended are still lagging, and we will continue to play a little bit of catch up. New homes on market month over month is only 72 more. That's, again, 3/4 of Washington State. And that's a really small number, all things considered. So really, our inventory is about the same. We're seeing a number of different projects that are under contract with builders. We're not seeing a slowdown on that. They are still very much acquiring land for future development. We happen to have 3 of them involved right now with potentially a 4th. There's just a lot that goes into it. There's a wee bit of time involved. And the nice thing is that tells us that they are also seeing the same forecast of good news that we are seeing. Yes, our market is different than a lot of other markets throughout the United States. It always has been. That's not new. But the key is each week, let's make sure that we're monitoring this and looking at our forecasting, because we forecast out 6 months to a year. Beyond that, it definitely becomes more of a guessing game. All right. So when we come back and we start taking a look at actual REOs and what's going on and what is the mayhem, yes, we still have all of our strikeouts, all of those little green dots. Those are supposedly bank-owned homes, or REOs, stands for real estate owned. The red strikeouts clearly show that that's not a real foreclosure. They're just being mismarketed, unfortunately. So at the end of the day, our foreclosures are horrifically low. And that's a good thing. That's not a bad thing, right? When we look at our inventory is up 48%, which is really at the end of the day, that's about 30 homes-ish, plus or minus. And we're dealing with really, really small numbers, even for the same month, year over year. Super, super small numbers. And that is awesome, really, at the end of the day. So those folks that think, hey, I'm going to buy a foreclosure, it's going to be absolutely amazing. In fact, for the first time in months, we had one that came up in Bellevue. They did underprice it, shockingly. I'm surprised. It will probably go about $100,000 over than what they listed it, but there is a foreclosure in Bellevue. There you go. And if you want to know about that, let us know. We'll send it off to you. In the meantime, if you have any questions, let us know, because here's the funny thing. If you really are into and really want to get some really solid information, look, like, subscribe, share, tell a couple of people you do like, tell a person or two that you don't like, so they can make a really good decision, because we're all in this together. In the meantime, have an absolutely beautiful day. It is super stormy outside. Stay dry out there, and I will see you on the next video. Take care.